How's it going, everybody? It's Keaton here. Welcome back to another video. And in this one, we're talking about my investment portfolio. This is sort of like a scarier video to make, I guess. And the reason for that is that I've made so many mistakes, like so many. If I had known what I know now about investing, I'd probably be at like double the money that I have, which makes me sad looking back, but also it's a cheap lesson when you're young. An example of this is I put like $4,000 into dogecoin, and now that's worth like $1,000. So those are the kind of mistakes that I'm talking about. Anyway, I appreciate you tuning into this video, and as always, this is not financial advice, purely for entertainment purposes only. Obviously your entertainment, not my entertainment. And the other thing I want to talk about is that this is not a flex whatsoever. I have just been very inspired by videos like this online, and I realized that I'm in a decent financial position for my age, but I'm by no means like rich or uber rich. But you really don't have to be to live a pretty amazing life nowadays. So anyways, this isn't a flex. I just hope that it inspires you. Now, with that said, what I said about it not being a flex and me not being really rich, if somebody like changed all the passwords on my investment accounts and I couldn't log into them for 40 years, I assume, you know, anything could happen, but I assume I'd be in a decent place for financial like retirement in about 40 years. And that's a really cool place to be. It kind of takes the stress off of every single day and kind of makes the money that I make a bonus. You may have heard of Coast Fire or Barista Fire. So FIRE stands for Financially Independent, Retire Early. And Coast Fire and Barista Fire are just two versions of that, where you save up, let's say $100,000 to $300,000, and then you either get a job you like or just keep working your current job, but you're able to spend everything that you make because you have this money in investments that's just going to be fine for you in retirement. So I love that concept, and it also allows for me to enjoy my life a lot more now. I actually read a book called Die with Zero recently, which I would recommend to anyone. Like, I'll make a video specifically about it because it's so good. But in that book, it talks about how a dollar today in your 20s or 30s, I don't know how old you are watching this, but a dollar today, no matter how old you are, is worth more than a dollar tomorrow. It's worth more than a dollar in your 60s, 70s, or 80s, because you really can't enjoy money as much at that point in your life, and there's no guarantee that you'll make it that far. So the premise of the book is to really try and spend every single penny that you ever make, because if you don't spend it, then you've wasted your life energy working for something that you won't actually get to enjoy. And that goes for donating as well. You should donate as soon as possible, because then you get to see the fruits of what you've donated, instead of, you know, donating this huge sum when you die and not even being able to enjoy watching people enjoy that money. Like, doesn't make any sense. But this is like financial YouTube. Everyone's talking about saving, retirement, early retirement, all this stuff. And I think this Die with Zero approach has so much more to it, like so much more substance, and makes you think a lot harder about money and what it's actually for. Because you could just accumulate numbers on a computer screen, and good for you, you've got numbers on a computer screen, but I want to accumulate memories. And so that's what I've been doing. I've just said, like, okay, I'm going to save around $2,000 a month. If I get a windfall or we have a good month, I'll save a little bit more, but I'm just going to try to spend on experiences and living while I'm young, so that those experiences can kind of wrap up and be their own compound interest of sorts, so that the memories I have when I'm older, I'm really happy with them. And even if I have less money, I know I'm going to be happy that I spent the time and the money to do the things I wanted to do while I was young and while I could enjoy it. So sorry, kind of a rant about spending and versus investing. I just think everyone should hear that, because most videos like this are just going to talk about just the numbers. But I want to talk about the life. It's about your net life, not just your net worth at the end of the day. And for those of you who are curious about how I got to this point, I'll go over the whole story as I talk about each investment, kind of paint my investment history so you can learn from my mistakes and my successes, which are very few. But anyway, the story starts, my parents had set aside some money for each of their kids, and when they started college or kind of come of age, they give that money to them so that they can use it, and it's much more useful at that point than, you know, when you're 40 or 50 or when my parents die. So anyways, I had some money in the stock market from them, and then I also had some money in this guaranteed 12% interest account, which a relative had started a business, and he had been offering 12% guaranteed interest when he started. He doesn't offer that anymore, but if you had put money in with him when he started, it was still 12%, which is pretty cool. He's basically a loan shark. So, you know, that's why I was able to offer 12% interest. But anyway, I had some money in the stock market, and I had money in this 12% interest account, but I was I don't know why, but I just never treated that money like it existed. Like, ever. I just treated it like, okay, that's sacred money. I might touch it when I buy a house someday, when I'm married, like treating that as if it was gonna be like 10 years down the road that I might touch that money. I knew I had it, but I really didn't act like I had it. And at this point I was making $300 to $400 a month, going to college and just working part-time for my family business. And if you're wondering, like, that's not enough money to live on, like, yeah, my parents were helping me out with college. So I come from a very blessed state, and I know that, and I acknowledge that, and I want to say that at the very beginning of this video, because without my family, this whole thing wouldn't have been possible. Not only were they supportive financially, but they were very supportive emotionally, and I always knew that, pursuing my own path and building a business as a young person would be okay with them, and I'm really grateful for that. And that's kind of leads me into what happens next, which was I decided to drop out of school and start a business. So I was around 22 at this point, and if you're wondering, like, that's kind of old. I did spend 2 years serving a mission for my church, so that kind of put me back on the time of starting college. I started that mission when I was 18, came back when I was 20, started school at 21. And then by this point, I guess I was still 21 when I started the business. So started going pretty well, like scaled up to like $10,000 months. If you're wondering what the business is, it's just a social media marketing agency. If you're interested in how you can do that, you can book a coaching call with me below, but there's also a ton of videos on this channel that will teach you kind of how the model works and how you might be able to do it yourself. But after about 9 months in business, I realized I hadn't saved anything. I was just reinvesting back into the business, learning, and I think that's fine. It wasn't a bad idea to keep doing that, but I realized that I needed to start saving. And I actually read Dave Ramsey's book. I forget what it's called, like Total Money Makeover. That's what it is. And it's where it's got him like cutting credit cards on the front page. It's awesome. But he talks about how the first step in your financial journey is pay off high interest rate debt. I think that's number one. I can't remember. Anyway, I didn't have any high interest rate debt. I didn't have any debt at all. And so the next step was to put together an emergency fund of 3 to 6 months of expenses. I think it's 3 to 12 months. So I said, okay, $10,000, if I had that saved, like, I think that would really help me. So I just set that goal and I started saving, and I put all of this into a high interest savings account at, high interest being a hilarious term nowadays, but I put it in an American Express personal savings, which nowadays I would recommend USDC through Voyager, which offers 9% per year instead of a measly like 0.02% at any high yield savings account right now. But anyway, in like February of 2020, I had scaled up to that $10,000 in reserves, and it felt amazing. Like, anyone who doesn't have that, get that, because it changes your life to know that you have that to fall back on. And it's also like, it's like going to the gym and getting fit. Like, once you prove to yourself that you can do that, anything becomes possible. It's really cool. So then, as we know, the next month, like, stocks went in the toilet and everything crashed. And I had that money in the stock market that my parents had put in for me, right? And I was watching and it was gone. It was like way down. And I was talking to a friend that like knows absolutely nothing about investing. He was like, oh, for sure there's gonna be another crash. So I was like, oh, I better sell. So I sold. I lost maybe like $5,000 of what my parents had set aside for me because I sold at that point, which, whatever. It's just a mistake that I'll have to live with. And just don't listen to other people who don't know anything about investing when making investment decisions. That's my advice there. But anyway, I sold that and it was just kind of sitting there. I didn't really know what to do. And investing scared me at this point because it seems like this thing that you have absolutely no control over, which is kind of true. And so I said, oh, I just want to invest in my own businesses and all this stuff. But the problem with investing in your own businesses is that it requires time from you. Like, it's never going to be completely passive, like buying a security like stocks, crypto, or bonds or something like that is so passive. Like, literally you just buy it and it's done with. Even real estate, it's always going to take some time from you, and you own this asset, which is like a physical thing, whereas stocks and crypto, it's literally just on an app on your phone. It's numbers on a computer screen and you don't have to worry about it. So that's the benefit of investing that I sort of clued into down the line. But at this point I was like, well, I don't know. I feel like I should buy something. I need to invest. Like, I had too much cash laying around. And so I decided to open a Roth, and I invested the max into that Roth. And this was in August of 2020. So I put like $6,500 into that Roth, and I was like, okay, cool. I've got something in investments, and it's in a tax advantage account, which I thought was potentially a good thing. And that was while I was living in London during 2020. I came back from London in November of 2020, and I sat on the plane next to this guy who was like super into crypto. He was like, I'm so heavy into crypto. He was like telling me all the coins I should buy, like all this stuff. And I was like, man, maybe I should look into it. And I had a friend growing up, like a church leader growing up, who was super into Bitcoin like 10 years ago. And I asked him about it when I came home from London. He was like, yeah, like you should get invested, like potentially just dollar cost average into things. And I was like, cool, let's try it. And so I finally bought Bitcoin in February of 2021 at like 57,000, which if you don't know, right now it's at like half of that. Anyways, so I started investing in Bitcoin, and then Ethereum was pretty low at that point as well. Started investing in Ethereum, and I just went on this crazy crypto spree throughout 2021 where I was just buying as much as I could. And when the crash happened over the summer, I just put in I took all the money that my parents had put aside for me in that high interest savings account, and I just plowed it into Ethereum at like $2,000. So I assume that will be a good decision. Right now it's not up that much, but potentially could be at some point in the future. And during my crypto investing spree as well, in March of 2021, I bought this townhome that I live in right now, which is in Salt Lake City, Utah. It's actually in the very southernmost part of Salt Lake County, almost Utah County if you're familiar with Utah. I was looking for a house, just like felt like I had to get into a house because I had finally had 2 years of self-employment income and 2 years of self-employment tax returns. So that meant that I could now apply for a loan, because you can't, if you're self-employed, it's really hard to get a loan. Anyways, I ended up finding this house through a friend of a friend, and the house appraised $20,000 under what I had offered for it. So I offered $455, I believe, and it appraised at $435. So I had to make up that $20,000 in cash. So it ended up being a good thing that I hadn't plowed like literally all my money into investments, and I would have had to take them out and probably take some capital gains on that. Instead, I was just able to put it directly into the house. So again, I bought this house for $455. I put down about $20,000, and then I had to put an extra $20,000 down. So about $40,000 cash to get into the home. I'm house hacking. I have a couple roommates, so I make money off of them, but it doesn't cover fully the mortgage. So I'm still out of pocket like $1,000 a month to live here, which is pretty good. And over the last year, the house has gone up over like $50,000. I think it's probably more conservatively, some people might say like $35,000 to $40,000. But regardless, it's been a pretty good investment. And that's like a large chunk of my net worth is actually inside this house because of how much it's gone up over the last year. So later in 2021, I went through Meet Kevin's Stocks and Psychology of Money course, which was excellent, by the way. You can see the full review on the Course Ranks channel. And in that course, he recommends getting into M1 Finance, which is an app that basically allows you to create your own ETF. So an ETF stands for Exchange Traded Fund. It just means it's basically tracking some sort of market. So VTI is an example of something that just tracks the entire American stock market. VUG is one that tracks just the growth stocks in that market. And then there's some that track like emerging markets and things like that. And index funds, ETFs are really good to get into because they're low fee and they just allow you exposure to the market without having to worry about investing and picking different stocks. So I decided to make my own, basically my own VTI or my own VUG, and I put in a bunch of different companies in there like Airbnb, Tesla, Apple, Google, all these companies that I was like, yeah, I use these, or like I've seen them and they're really cool and I think they're going up long term. And that portfolio has been up and down. Right now it's down like $2,000 because of what's going on in the market. But anyway, I switched the money that I did have in Schwab, which is where my parents had set up that brokerage account, and I transferred it over to M1 Finance. And I also ended up transferring my Roth IRA over to M1 Finance as well, and just investing that in VTI. And I've made like $1,000, I think, on that. It's been as high as $2,000, but it's down right now. In addition to all of these things, I've made some sketchier crypto investments. As I mentioned, Doge, about $4,000 in that, and now I've lost about 3,000 of that. I also invested in Time Wonderland, which is very popular. I haven't even checked it. I'm sure it's just crazy down right now, but they do have some really good staking, and I'm confident that if I hold on to, I don't know about Doge potentially, but I'm just holding for now. If I hold on to Doge, Time Wonderland, and then there's another one I've invested in that my brother recommended called VRA. If I just hold on to these and I continue the staking rewards, I think in 5 years they should be in a good spot. So I don't need the money right now, and it's always somewhat good to just put your money into high risk investments and see what happens. But doing this has definitely helped me learn my own investing style. And I think it's much more of like a slow and steady wins the race. Like I could try to invest and, make $30,000 over the weekend, but more than likely I just don't have enough time to sit around. I'd rather work on my business than learn about like random investments that might 4x over the weekend and might not 4x over the weekend. So anyway, so that's sort of my philosophy at this point, at least in my investing career. So now potentially the moment that you've all been waiting for, revealing the numbers behind all of this investment portfolio, like how much I have in each investment. I'm not going to include the money that my parents gave me just because I don't feel like it's fair to claim that that's my money, because it is, but I didn't earn it. So I feel more comfortable sharing what I've actually earned and invested myself by this age of 24. So the first and biggest thing that makes up the biggest chunk of my net worth is the equity that I have in this house. So let's go ahead and go with a conservative estimate of $40,000 of appreciation over the last year, which sounds ridiculous. If that's the case, my house would be worth $495,000 and I owe about $406,000 on it. So I'm still pretty happy in about $35,000 to $40,000 of appreciation in a year. That's really good. Actually less than a year. So that's where the majority of my net worth is right now. And then the next biggest part of my net worth is going to be in crypto, which is made up of primarily three coins: Bitcoin, Ethereum, and USDC. In USDC, I have about $6,000. In Ethereum, I have about $16,000. And in Bitcoin, I have about $15,000. So the total for all of that is about $35,000. And then the next biggest part of my net worth is going to be in stocks. So I have about $7,500 in a Roth IRA, which I mentioned earlier. And then last year, instead of investing in a Roth IRA as my retirement account, I started investing in an HSA because it's actually tax advantage on both ends. So I get to write it off on the way in and on the way out. And I don't actually plan on using it for medical expenses. So if I just hold on to that money until I'm 65, then I don't get taxed on it ever, which is pretty cool. And I could use it for medical expenses if something crazy comes up. So it's a good fail-safe, I think, on both sides. I'm not a huge fan of retirement accounts in general, just because they lock up your money for so long, but this one seems like a good one because you can use it in the case of a medical emergency, which I feel like is a pretty good idea. And then the last part of my net worth, this is also crypto. It's just about $4,000 to $5,000 invested in random coins. Like I mentioned, Time Wonderland, Solana, ADA, Doge, what's the other one? VRA. All of those make up like another $4,000 to $5,000 in my portfolio, which brings the grand total of my net worth and my investments to about $140,000. Pretty pleased with that number. As Charlie Munger says, the first $100,000 is the hardest, and I definitely agree with that. It helps having, that support that I've mentioned that I've had, but I've also worked hard and built a business, worked smart to be able to make a decent amount of money. I've saved really aggressively over the last few years, and now I'm letting off the brakes a little bit just because I want to enjoy my life while I'm young. And I would say that I've definitely been enjoying my life over the last few years, just not quite as much. And I've been feeling more guilty about spending money than I should. So I'm letting go of that guilt, just dollar cost averaging into the things that I believe in most, which right now is like Ethereum and just the general stock market, and hoping for the best. I know if literally everything goes to crap tomorrow, I have the skills to build a business, which is the biggest safety net that I think exists in the world. A job really isn't that secure when you think about it. A business gets a rap for being not secure, but I think the marketable skills that you gain by building a business and the mindset that you develop is way more valuable than anything else you could have. So that's what I'm really grateful for at this point. So with all of that said, let's dive into my final pieces of advice. The first one I have for investing is just to try it out. Like, you just have to buy something. It's a big mind barrier. Like, there's so many things, there's so many YouTube videos you could sit there watching and trying to figure out all these fancy things about investing. But at the end of the day, you just have to download an app, buy a stock or buy some crypto and watch it and see what happens. And my advice there is don't invest what you can't afford to lose, and you won't run into any huge issues. And then once you start buying, you'll start to sort of develop the mindset that you need to become a successful long-term investor. And something beneficial about actually just getting into the game and starting to buy things is, like, every day when I check my crypto account, or like I check my stocks and they're down by $2,000, or they've been down as far as like $6,000, and I can see that, I'm like, oh, I don't love that. Like, it doesn't feel good, and your stomach sort of lurches. But once you build up that tolerance, then you're like, oh, stocks are on sale, crypto's on sale, let's buy some more, and then it will go up. And that mindset has really helped me not only in my investing life, but personal life and just everything. Like realizing that at the end of the day, like it's just numbers on a computer screen and it's a fun game to play. But what matters is relationships and building your own skills and just, you know, being a good person. So don't let it take over your life, but also it's a good thing to teach you how to think. I love that about investing. And then my last piece of advice is just to set up an automatic recurring buy and dollar cost average into the market. Like set up something that feels super comfortable. So for me, it's like $2,000 a month is really comfortable. That's just, I can afford to put that in. I know it's not going to stress me out. And so I just do that. I just set it up. I split it up over the things that I want, and I buy every single week or every single day, depending on what the security is. And you can set up those recurring buys on literally any app. If they don't have that, they're stuck in the Stone Age, so you shouldn't be using them. But set up those recurring buys and then just kind of, you could even delete the app. I've done that at times. I should probably do that right now. And then you don't have to stress, and you're just like, oh, well, it's getting invested. I buy when the market's up, I buy when it's down. And over time, I'm gonna make money because anybody who's invested consistently in the stock market for the last 30 years has made money. So as long as you just stick with those tried and true investing principles, you'll be set. So that's it, guys. Thanks so much for tuning into this video. It was a pleasure to make, and I hope that you enjoyed it as much as I did. It's been a long journey getting here, and it's fun to kind of share the story. Interested to hear what you guys are doing when it comes to investing, and talk to you soon.